Welcome back to Talk Tickers, where we like to break down these earnings calls so you don't have to.
Right.
And today we are diving deep into Walgreens Boots Alliance's Q1 2025 performance.
Yeah,
Get ready for a wild ride through the world of pharmacy retail.
absolutely. There's a lot to unpack here.
Yeah.
I'm ready to make sense of it all.
Perfect. So let's start with some of those headline figures. Sales increased by 6.9% on a constant currency basis. That sounds pretty promising, right?
It does.
But here's the twist. Adjusted earnings per share actually dropped 23% year over year. So what's going on there?
Well, that's the million-dollar question, isn't it? While the sales increase is encouraging, that earnings drop definitely raises some eyebrows. WBA is in the midst of a turnaround plan, and this quarter's results paint a kind of mixed picture of their progress.
All right, so let's dig into the details a little bit more and try to understand what's driving these numbers.
Yeah.
First up, their U.S. retail pharmacy segment, which is the core of their business. They reported comparable sales growth of 8.5%, primarily driven by pharmacy sales. However, retail sales actually declined. Can you explain that discrepancy?
Sure. So their pharmacy sales benefited from two key factors. One, brand inflation, meaning the prices of brand name drugs went up, and two, an increase in the volume of prescriptions being filled. This suggests that their core pharmacy business is holding up pretty well.
Yeah.
However, that decline in retail sales does point to some challenges. They cited a weaker than usual cough, cold, and flu season, coupled with a more cautious consumer spending environment. Basically, people just weren't stocking up on over-the-counter meds and other retail items like they usually do.
So it's a bit of a tale of two sides then within the same store.
Yeah, or you could say that.
What about store closures? Weren't they starting to shutter some locations this quarter as part of their optimization plan?
Absolutely. They closed around 70 stores in Q1. What's interesting, though, is that they're exceeding their historical prescription retention rates. This means they're effectively transferring prescriptions to other nearby locations and minimizing disruption for their customers. It suggests they're being strategic about which stores to close and ensuring a smooth transition for patients.
That's a really interesting point. It sounds like they're not just blindly closing stores, but actually thinking about how to retain those pharmacy customers, even if a particular location shuts down.
Exactly. They're aiming for a smaller but more efficient and profitable store footprint.
Makes sense. Now let's talk about a topic that was front and center during this earnings call. Reimbursement contracts with pharmacy benefit managers, or PBMs, and payers. Sounds like they've made some progress in this area.
This is a big deal. For those unfamiliar, PBMs are essentially middlemen between drug manufacturers, pharmacies, and health insurers. They negotiate drug prices and determine which medications are covered by insurance plans. Walgreens has finalized all of their contracts with PBMs for 2025. More importantly, it seems they've successfully negotiated terms that address some long-standing concerns, like reimbursements for high-cost specialty drugs, and a better balance between brand name and generic drug pricing.
So they're taking steps to make sure they're getting fairly compensated for the medications they dispense, especially those expensive specialty drugs that can really strain their margins.
Precisely. These negotiations are all about reducing their reimbursement risk and gaining more control over their profitability. It might not have an immediate impact on their bottom line, but it sets the stage for a more sustainable and profitable pharmacy business in the future.
It sounds like they're playing the long game here, trying to create a more solid foundation for the future, even if it means weathering some short-term volatility.
Exactly. They're not just looking for quick fixes. They're aiming for sustainable long-term solutions.
Okay, so we've talked about their U.S. retail pharmacy business store closures and their negotiations with PBMs. What other key initiatives are they focusing on as part of their turnaround strategy?
Another area they're tackling is drug procurement. They're working with their longtime partner, Cencora, to improve their drug buying process. Their goal is to become world-class at procuring medications, which they admit they're not at currently.
So they're recognizing their weaknesses and actively working to address them. That's a good sign. What's their strategy for achieving this?
It sounds like their discussions with Cencora are progressing toward a more collaborative and mutually beneficial partnership, focusing on both short-term gains and long-term transformation of their procurement process.
So they're looking for both quick wins and a fundamental shift in how they buy drugs. That makes sense. What are some of the specific things they're doing to achieve this?
Well, they're exploring new ways to leverage their combined purchasing power to negotiate better prices from drug manufacturers. They're also investing in technology and data analytics to improve their forecasting and inventory management, which can help reduce costs and ensure they have the right medications in stock when patients need them.
It sounds like they're pulling out all the stops to get their drug procurement process up to par. Let's move on to their retail turnaround strategy. They're facing some headwinds with the current consumer climate, but what are they doing to combat that?
They're focused on modernizing their operations, which includes everything from inventory management and assortment optimization to boosting their omnichannel capabilities.
hmm
They're essentially trying to become more agile and responsive to changing consumer demands.
So it's about becoming less reliant on traditional brick and mortar sales and more focused on creating a seamless experience for customers, whether they're shopping online through their mobile app or in physical stores. What are some examples of how they're doing this?
They're investing heavily in their e-commerce platform, making it easier for customers to order products online and choose between home delivery or in-store pickup. They're also using data analytics to personalize product recommendations and promotions for individual customers, similar to what you see on Amazon or other online retailers.
So they're taking a page from the playbook of successful e-commerce companies and applying it to the pharmacy retail world. That's smart. What about their product offerings? Are they making any changes there?
They're definitely shaking things up. They're leaning heavily into the health and wellness trend, introducing new products like superfoods, sports, nutrition supplements, and women's wellness items. They're trying to position themselves as a one-stop shop for all your health and wellness needs, not just a place to fill prescriptions.
So it's about expanding their appeal beyond just people who are sick or need medication. They're trying to attract health-conscious consumers who are looking for preventative care and wellness products. It's a smart move considering the growing interest in proactive healthcare.
Exactly. They're recognizing that the traditional pharmacy model needs to evolve to stay relevant in today's market.
Now, this all sounds very promising, but they also talked a lot about financial discipline during their earnings call. What specific actions are they taking to improve their balance sheet and generate positive free cash flow?
They're taking a multi-pronged approach. They're reducing capital expenditures, meaning they're being more selective about which projects they invest in and trying to squeeze more value out of their existing assets. They're also streamlining working capital, which means they're optimizing their inventory management and payment cycles to improve cash flow.
So it's all about tightening the belt and becoming more efficient in how they manage their money. Are there any other major initiatives they're pursuing to improve their financial position?
They're still exploring options for divesting non-core assets like Village MD and Summit City MD. These are healthcare providers they acquired in recent years, but they've decided to focus on their core pharmacy and retail businesses.
It sounds like they're streamlining their portfolio and doubling down on their core strengths. It's a strategic move that could help them unlock value and improve their financial performance.
Exactly. By shedding these non-core assets, they can free up capital to invest in their core businesses and potentially reduce their debt burden. It's a classic example of corporate restructuring to focus on areas where they have a competitive advantage.
It seems like they're pulling out all the stops to get their financial house in order. This focus on financial discipline is a really important signal to investors, especially in today's uncertain economic climate.
Absolutely. It demonstrates that they're serious about creating a sustainable and profitable business for the long haul.
All right, we've covered a lot of ground in this first segment. We've talked about their financial performance, their efforts to revamp their pharmacy business, and their initiatives to modernize their retail operations. But before we move on to the This Is Not Financial Advice segment, where we'll explore an outrageous but plausible trade idea, I'm curious to get your overall assessment of WBA's Q1 performance. What are your key takeaways?
Well, I think it's fair to say that WBA is a company in transition. They're facing some significant headwinds, but they're also taking proactive steps to address them and position themselves for future growth. Their efforts to renegotiate reimbursement contracts, optimize their store footprint, and modernize their retail operations are all encouraging signs.
I agree. They're not shying away from the challenges, and they're demonstrating a willingness to adapt and evolve.
And perhaps most importantly, they're prioritizing financial discipline, which is absolutely crucial for any successful turnaround story.
Absolutely. It's the foundation upon which everything else is built.
It's about creating a solid financial base that allows them to invest in their future weather economic storms and ultimately deliver long-term value to shareholders.
Well said. It's clear that WBA's journey is far from over, but they're taking meaningful steps in the right direction. So let's take a break from the serious stuff and have some fun with our This Is Not Financial Advice segment.
I'm always game for a bit of speculation. What wild idea do you have up your sleeve today?
Okay, so we've talked about how WBA is trying to modernize their retail experience, right?
Yeah.
What if they took it a step further and partnered with a major fitness tracker company?
But that's an interesting thought. We've seen some interesting collaborations in the health and wellness space lately, but this would be a whole new level. What are you envisioning?
Imagine this. You're wearing your fitness tracker, diligently logging your steps, sleep, heart rate, all that good stuff. WBA, in partnership with the fitness tracker company, could use that data to offer personalized product recommendations and services.
So if your tracker notices you're consistently getting poor sleep, they might recommend melatonin supplements or a consultation with a sleep specialist through their telehealth platform.
Exactly. Or if you're crushing your workouts but your tracker detects muscle strain, they could suggest a targeted pain relief cream or even connect you with a physical therapist for virtual guidance.
It's like having a personal health concierge right on your wrist, powered by WBA's vast network of products and services. That could be a game changer.
And aligns perfectly with their push toward a more holistic health and wellness approach. They wouldn't just be reacting to people's illnesses, they'd be proactively helping them stay healthy and prevent problems before they arise.
It's a brilliant way to leverage technology and data to create a more personalized and engaging customer experience. And it opens up a whole new world of possibilities for WBA.
Think about the potential for targeted marketing campaigns. They could send you a coupon for sunscreen when your tracker detects you're spending a lot of time outdoors, or remind you to refill your allergy medication when pollen counts are high in your area.
And the data they collect, properly anonymized and aggregated, of course, could be incredibly valuable for research and development purposes. It could help them identify emerging health trends, develop new products and services, and even partner with pharmaceutical companies to create personalized treatment plans.
This is where things get really exciting. And remember, folks, this is all hypothetical. But imagine if they combined this fitness tracker data with their pharmacy records and customer purchase history. They could create an incredibly detailed picture of individual health needs and preferences.
They could identify patients who might benefit from specific clinical trials or offer tailored wellness programs based on their lifestyle and health goals. It's taking personalized healthcare to a whole new level.
Right. We're getting a bit carried away here. Let's bring it back to reality for a moment. This is all purely hypothetical, and there are undoubtedly challenges and ethical considerations to address before something like this could become a reality.
Of course, data privacy and security would be paramount, and there's always the risk of overwhelming customers with too much information or making them feel like they're being constantly monitored.
Exactly. But from a purely speculative standpoint, the potential is undeniably fascinating. It's a glimpse into a future where technology and data can empower individuals to take control of their health in ways we never thought possible. And it could position WBA as a leader in the personalized healthcare revolution.
It's definitely a bold and ambitious vision. Whether or not it comes to fruition remains to be seen, but it's certainly food for thought.
All right, listeners, remember, this is not financial advice segment. We're just having a bit of fun exploring the possibilities. But who knows, maybe someone at WBA is listening and taking notes.
One can only hope. Now let's wrap up our discussion of WBA's Q1 performance and leave our listeners with some final thoughts.
We've covered a lot of ground today, from their financial results to their strategic initiatives, and even ventured into the realm of hypothetical scenarios. What are your key takeaways?
Overall, I think WBA's Q1 performance sends a clear message. They're determined to turn things around. They're facing challenges, no doubt, but they're tackling them head on with a combination of strategic restructuring, operational improvements, and a renewed focus on customer experience.
They're not just talking the talk, they're walking the walk. And their commitment to financial discipline is a particularly encouraging sign. It shows they're serious about creating a sustainable and profitable business for the long term.
Exactly. They're laying the groundwork for a brighter future. Whether or not they succeed remains to be seen, but they're certainly making the right moves.
It's a compelling story of transformation and resilience, and we'll be watching closely to see how it unfolds in the quarters to come.
Absolutely. WBA is a company to keep on your radar.
All right, listeners, that wraps up our deep dive into Walgreens Boots Alliance's Q1 2025 earnings call. We've analyzed their financial performance, dissected their strategic initiatives, and even dreamt up a wild hypothetical scenario.
It's been a fascinating journey through the world of pharmacy retail.
We always appreciate your insights and perspectives.
And we hope our listeners have gained a deeper understanding of WBA's current position and future prospects.
As always, remember, this is just our interpretation of the earnings call. It's not financial advice, so please do your own research before making any investment decisions.
We encourage you to share your own thoughts and takeaways from this episode in the comments section below. What surprised you? What questions do you still have? We'd love to hear from you.
Until next time. Happy investing. And it's fascinating to see how they're adapting. They're not just filling prescriptions anymore.
Right.
They're becoming this like comprehensive health and wellness destination.
Absolutely. And, that focus on financial discipline, operational efficiency, and those strategic partnerships, it's a really clear indication that they are serious about this transformation. They're not just applying Band-Aids to problems, they're addressing the root causes and implementing those long-term solutions.
Exactly. They're not shying away from making tough decisions like closing underperforming stores and divesting those non-core assets. It's all about focusing their resources and energy on the areas where they have the greatest potential for growth and profitability.
Right. And I think that's a key takeaway for investors, right? They're demonstrating a willingness to adapt, evolve, and make those necessary changes to thrive in a competitive market. Their commitment to creating a sustainable and profitable business model, it's evident in their actions.
It makes it a pretty compelling story, I think. It's not just about numbers on a balance sheet. It's about a company going through a pretty significant transformation. And it'll be interesting to see how it all plays out. All right, folks, as always, remember, this is just our take on WBA's earnings call. It's not financial advice, so please do your own research before making any investment decisions.
Of course. But hopefully this deep dive has given you some valuable insights into their performance and strategic direction. We encourage you to dig deeper, explore those different perspectives, and form your own conclusions.
We always love hearing from our listeners, so drop us a comment. Let us know what stood out to you from this earnings call. What surprised you? What are you most curious about?
Right.
We're all ears.
Yeah, and your insights and questions help us shape future episodes and ensure we're delivering the content that matters most to you.
Until next time, happy investing.